Welcome in the class of Fundamentals of Economics, and we will discuss today about VAT and GST aspect. So I, Dr. Sailesh Kumar Singh, will take you in the explanation regarding the value-added tax and the goods and service taxes. So we will discuss about the comparative aspects and the different features of this VAT and GST one by one. So let's go ahead. So GST is one of the very innovation, you can say major reforms in the Indian taxation system, and really it has been appreciated by the national and international, you can say, organizations and the countries as well. So introduction of GST, that is goods and services tax, has really brought you can say a good impact over the various you can say tax in our country, and it has removed the different levels of the taxation. It has removed the different kind of taxation, and it has brought most of the taxes under the same categories, that is called as GST. And under the GST itself, there are different percentage of GST or different rates of GST, and it depends on the nature of the product or nature of the services, nature of the goods itself. So it is basically it is going to remove the cascading effect of that is double taxation system, which has really created a bigger problem. Like a particular product is going to be marketed right now is having sale tax of the X%. It is being further processed, and the processed product are going to be marketed with Y tax. So this Y tax also includes that X tax, means over that the processor has already paid a tax. So the consumers are going to pay that both kind of tax. The first, the tax on the raw material, and the second, the tax on the value addition over the product, the processing of that product. Yeah. So here already raw material tax over raw material has been paid by the processor, but after processing again we are going to pay the tax on both aspects. So there is a doubling of tax on the raw material. So this kind of problems has been resolved when GST has been introduced, and it is going to be a tax on a value addition that is imposed on the production, distribution and consumption of goods and services. So it is not only you can say levied on the goods, rather it is going to levied over the goods as well as the services, right? So it is going to be levied over the production, distribution as well as consumptions, right, of that goods and services. So that's why here it is different from the VAT, that is value added tax. We know that VAT is an indirect tax, and that is levied on each stage of manufacture and distribution of the goods on incremental value. So VAT is going to resolve that problem, where every steps has to be taken as differently, and it is going to be, you can say, the taxed as a separate taxes. So but it is GST is a little bit different, right? So it is including the goods as well as the services aspects, while the VAT was only over the sales of the goods, right? So GST was including not only the sales, but it is on the supply of the goods as well as the supply of the services. So it is a better taxation system in comparison to VAT. So how can we compare between that? So VAT is a consumption tax, right? And it is levied on the value addition at each stage of production or distribution of goods. while GST is the destination based tax where it is going to be, and it is charged on the manufacture, it is charged on the sale and the consumption of goods and services, right? So there is a variation. One is based on the sale only, and while other is based on the supply aspects of the goods and services. Rather, it is broad also, it is also including the services. Payment mode on VAT is offline, while the payment mode on GST is online. So, and in both cases, you can compare that registration is compulsory if the turnover is greater than 10 lakh in case of VAT, if it is greater than 20 lakh in the GST. Compare how it is. So, the taxation is based on the summary in the VAT, while it is transaction, how much transaction it is going to be carried out. So it is totally a kind of tax which is based on the online system. So you are not going to do any malpractices in the GST aspect. So revenue collection, seller state is going to collect, while it is GST is the consumer state is going to collect this revenue. So and excise duty is it is levied on the manufacture of excisable goods, while it is not levied in case of GST. So interstate sales, input credit is not possible in case of interstate sales, while here input credit is availed in case of interstate sales. So this means those sales which are made over the interstate level, so it will be, because it is based on the consumer state, right, which is having responsibility to collect the revenue. So it is here in GST, it is advantage that input credit can be availed in case of interstate sales, while it is not possible in case of VAT. So revenue collection in case of VAT it is based on the seller state that is going to collect the revenue. So it is totally defined on the value addition that has been carried out, while in the GST it is the consumer oriented. So that's why it is going to be collected as a by the consumer state. So there is a clear differentiation, and so VAT is what a multi-point tax system, and we know that it is levied by the state government, and at this level of production. In this regime, the tax is levied on the incremental value, additional value, or you can say the value addition. So it is also going to cascade the cascading effect at the different levels of sales. So it is also having same objective like the GST. On the consumption tax, where the value addition made by any firm or individual, it is going to be differentiated, it's going to be calculated between the cost by the purchaser and cost which the individual has paid in the preceding marketing or preceding purchase. So this difference is what the value addition, and on this the tax is going to be collected. So it allows a purchaser of the good to avail input tax credit. Means if I have purchased on X rupees, so and I have paid the Y tax. So suppose that after processing, when I have sold it, I have sold it, then the difference whatever made here is going to be reduced, is going to be taxed rather, and whatever tax that will be added here will be totally based on the value addition that I have done. So if the tax paid after this is Z, so the actual tax that is going to be paid is Z minus X. For availing the benefit of input tax credit, it is mandatory that every dealer must be registered. Without registration, you are not going to avail such kind of input tax credit. So So VAT is levied at the different types of rates: 0% for the agriculture goods and items of social significance, 1% on the gold and silver jewelries, 4% on raw materials input used in manufacturing capital good, 20% for luxury items, and remaining items are taxed as per the normal slab rate, that is 12.5. GST, however, is a destination-based value-added tax that is charged on the production, sales, and consumption of goods and services, supply of goods and services. So, GST applies to the value addition at each stage, and no other tax would be levied, which result in elimination of the cascading effect. So, for the same period, there is no any additional tax that is going to be added. So the supplier of the goods and services is going to avail the input tax credit, and the GST paid on the purchase of the goods will be set off, will be uh, reduced against the GST payable on the supply of goods and services. So here there is a similarity a little bit, and the ultimately, at the end, and the end consumer that bears the tax imposed by the last supplier in the distribution chain. So that is the final GST that is going to be applied over the consumer. So this is what can say the GST. In India, we have dual system of GST. One is applied over the levied by the central government, other is the state government on the tax, and it is central one is called as central GST, that is, and center charges the tax on the intra-state sales, while the state charges tax on the services called SGST. For union territories it is called UTGST. So for interstate supply of goods and services that are taxable are covered under IGST, that is integrated goods and services tax. So again, for many online purchase of the item through the, if you might have observed the credit card slabs, you might have observed that IGST kind of things have been applied over that. And there are many indirect taxes which are some which has been summed under the GST once it was introduced, like at CGST, excise duty, service tax, surcharge and cess has been added. At state GST, octroi entry tax, VAT, luxury tax, surcharges and cess has been included, and at IGST, central sale tax has been included. Right now the GST slabs have been fixed at 5%, 12%, 18% and 28% categories. The major differences that we can here we can discuss is the VAT is an indirect tax, wherein tax is imposed at the state level at every stage of production or distribution of goods and services, with credit for tax paid at the previous stage. Means whatever the tax has been paid at the previous stage has been credited already, and this credit is the benefit for the processor or for the individual or organization which has done this value addition, right? And so the tax is only levied over here over the value addition. GST is a single tax that is levied on the supply of goods and services, and it's based on the principles of value addition or changes, while VAT is levied on the sales of goods, while the GST is the point of taxation that is on the supply of goods and services. So this is a summarization where we have already discussed. So registration and payment under VAT regime are performed offline, whereas in GST completely online system, and registration, filing of return and all other function can be performed through a common GST portal managed by Goods and Services Network, GSTN. So that is, when it comes to registration for supplier in the VAT, the registration becomes mandatory when the turnover of supplier beyond the 10 lakh. However, the aggregate turnover of supplier when it exceeds from 20 lakh is required to go for registration under the GST conditions. So that is a summary based taxation, whereas the seller of goods has to, where the seller of the goods has to submit the return at the end of particular period. However, GST is transaction based taxation system, and all firms and the individual who are working over that have GST number here, and they are going to file the return. In case of the VAT, the seller state collect the revenue, whereas in GST, the revenue is being collected by the consumer state. So this is how the GST and VAT are different from each. We can further differentiate. In VAT, the manufacturer of excisable products is charged with excise duty on its production, and VAT on intrastate sales, which causes double taxation. So although it has reduced the taxation system, double taxation, but a little there is a problem where manufacturer is charged with excise duty, VAT on intrastate sales, so double kind of tax has to be paid by the manufacturer, right? While in GST there is no chance of double taxation at all, right? So under VAT system, input tax credit can't be availed in case of interstate sale, right? However, it is not so in GST. It is based on the one tax, one nation, one tax. So input tax credit is available even under the interstate sales, right? Suppose that one manufacturer of clothes and central excise duties is levied, that is called as VAT. So and VAT is imposed on the sales within the state. But although VAT and VAT both are value added tax, but the set off is not possible because the VAT is levied by the central government. State government impose VAT. So what is that? Although VAT is levied, but VAT has to be also imposed. So it is going to be create again a high bracket of tax. So however, in GST, this kind of double taxation is not possible. So it is more improved version. You can say it includes all goods and services. It is based on the supply of the goods and services, while the VAT is based on the goods being sold out.